Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, March 20th, 2019. Happy Hump Day, happy Fed Day. Today is the FOMC statement day and the Fed interest rate decision at 1 o'clock p.m. Central, 2 o'clock p.m. Eastern, and that is going to be very, very important. It's going to give us another one of these key levels that are very important to the charts. The last time we got one was January 30th. The time before that was December 19th. And before that was November the 8th. So each of those times we've had significant moves away from those key pivots once they've developed. We'll get another one here today. Again, expecting the market to mostly remain flat, sideways, range bound heading into that. We could get some movement one way or another. But one thing that's important here to notice is that we had quite a rejection on the low end, which led to this rally. And then yesterday, late in the day, we got a bit of selling pressure that punctuated the high end of the move. So that gave us two significant rejections at either extreme of the move. That gives us what could be a new key range. So this could be the impulse move up. Are we now going to see the pullback to fulfill the midpoint of that range? That would be 27.9263. And so for the most part, you want price to stay below the midpoint of yesterday's range, or perhaps below the 25% key level, which is 28.47. So basically below that zone, 28.45, 28.47, below that area would, staying below there would suggest perhaps we come down. Again, we could continue to trade back and forth heading into FOMC, but once FOMC comes out, we may see a more definitive move. One thing to keep in mind is sometimes it's not the day of the FOMC statement and Fed interest rate decision. Sometimes it's the day after that gets the biggest movement. So it's not just today, but again, this could be something that sparks a move over the next week to 2 weeks, and then you could see some sort of counter move over the following week to 2 weeks. So this could be something that we're playing off of for the next 4 to 6 weeks perhaps. All right, let's take a look now at the NQ. You'll see here the NQ sideways, inside day so far, pre-market heading into RTH. A bit of a rejection tail yesterday, not the strongest, but a bit more selling pressure than we've seen at the end of a day in quite a while. Great impulse rally here. Again, this move probably isn't done to the upside, but if there's any trouble getting above 7,400, that could suggest that perhaps we are headed back to the midpoint of this recent rally, which is 71.93.5. So again, 7,400 is going to be a very important level to watch. If you squeeze out a bit, you'll notice 7,400 is also the bottom of the key little box here that formed just before we sold off last fall. That's the highest prices we've seen. So again, to get above 7,400 would suggest we rally back to recent highs at 7,700. Failure to get above 7,400 again, easy midpoint retest with a shot to retest the low. So we'll see again how this plays out post-Fed. Lastly here, let's take a look. This is crude oil. You'll see crude oil has had a nice rally here recently, a nice rejection off the lows, very similar to the equity markets here. We get a rally, bit of a top yesterday. This top came in hours before, a good 5 hours before the ES and the NQ topped. And it still continues to hold in place. We're now below the previous session's low, so lower highs and lower lows so far to begin the day here in crude. A very clear rejection intraday off the 59.40s. I would say 59.40 is a big time level of resistance there, and right now below that area at the moment. So again, if this is an impulse rally here on the way up, do we come back to the midpoint of that range, which would be 57.19? That would also be the previous month's close. We basically going, from here up and then cleaning it out back to the previous close. So again, any failure to reestablish acceptance above 59 would suggest more near-term weakness toward 57s. All right, let's take a look at gold futures. This one has been coiling significantly, coiling up big time. You can see the compression here. We've got compression here. It's kind of all like this. A little failed low developing today below the previous session's low. Still compressing inside the range. This is clearly building energy for a post-Fed move. This could easily see a move up, which could, obviously bring this thing back up a little bit back toward 1330, and again finish the move toward 1360. If it's to the downside, 1280 is going to be a big test. So I still believe that we have more upside here in gold. We have this key range 1280 up to 1360. That right there is your price distribution. We held it and rallied most of the way. We've just pulled back and we're now forming this very narrow range here. I think it gives us a really good shot to squeeze to 1360 in the top end of this range at least one more time before we turn down. Again, any failure to hold 1280 though would be significant and could open things up back toward 1245 and perhaps even as low as 1200. So this is a big time area of support that needs to hold now, 1280. With this compression here ahead of Fed, again, we could be building energy for a nice breakout move, perhaps to the upside given the higher lows we've seen and the failed new low today. Above 1312, 1313 could open up a nice return back up the ladder toward 1360. Alright, that is it for now. Real quick programming note, I will be out of the office over the next 2 sessions here throughout the rest of the week, so there will be no more pre-market reports. The next pre-market report will be next Monday, March 25th, 2019. Have a fantastic rest of your week. Good luck, trade well, and I'll see you soon. Take care.